Let's talk about what is happening with Credit Agricole. Trading revenues slumping in the first 3 months of the year, missing analyst estimates and squeezing earnings at the investment bank. Retail, there's also some weakness there. The company, though, says it is well on track to reach its 2019 targets. Joining us now from Paris for an exclusive interview, Xavier Musca, Credit Agricole's Deputy CEO. Good morning, sir. What happened in trading? Can you just run us through the numbers and where you saw the weakness?
Well, what has happened is something which is quite easy to understand. First of all, you have to take into account that there have been changes in the perimeter. We have deconsolidated our participation in Banque Saudi Al Fransi, which accounted for 70 million euros of revenues of profit in 2017 first quarter. Second, obviously, there has been evolution of exchange rates, which were unfavorable. Dollar went down by more than 14% during the fourth quarter of 2018 compared with the first quarter of 2017. Lastly, we are mainly a debt house, which means that we are very much strong and specialized in fixed income, whose activity has been quite sluggish during the first quarter of 2018. And we are not doing proprietary trading, so our revenues of market activities went down quite markedly. But we are not worried nor unsatisfied with our CIB. We see that's a very good thing that exchange rate and perimeter constant, our costs have gone down by 0.3%. And we see that our risk-weighted assets are down by 10%. We have the CIB we want, which is a de-risked CIB with a very low level of VaR. So that's mainly the explanation, a weak market and a bank which is not trying to compensate by taking more risk, the sluggishness of the overall activity in the markets.
Interesting. It's the reduction in risk weighting that I think is interesting. Javier, can we talk a little bit about retail as well? Retail is a little weaker than maybe some would have anticipated. But my question to you is a simple one. Are the comparisons fair with the previous period? There were a lot of kind of exceptionals in the retail numbers, and therefore I'm just wondering if this is a useful metric to compare backwards.
No, that's a very good remark. In fact, when you compare Q1 of 2018 with Q1 of 2017, indeed, there is a marked decline in profits and revenue. But that's mainly due to the fact that in Q1 of 2017, we had a significant amount of early repayment fees, which were stemming from the huge movement of home loans renegotiation, which took place in France. But when you compare Q1 of 2018 with Q4 of the last year, we see an improvement of 1.8% our net income. So that shows that we are at a turning point. We are compensating by extra fees, notably on insurance, life and non-life, but also on asset management, the impact of low interest rates we are suffering from in classical retail activities. And on top of that, we are adjusting by reducing markedly the cost. Operating costs have gone down by 2.4% in LCL, which is our retail bank. So we are adapting ourselves to this new low-rate environment.
Can I get your assessment of where you see the European economy right now, where the French economy is going, where the German economy is going? We saw weaker than expected German data this morning. What is your sense? Are we in a soft patch right now, or are we starting to see something more sustained in terms of the downturn?
I've shown these figures, but it's very difficult for me to comment on them. What we are seeing on the ground, I mean, through our activities, is not reflected, is not reflecting those figures. In fact, our activity is quite strong, both for home loans, which are progressing during the first quarter at a high rate, more than 7% for LCL, for example, and also for companies. So for the time being, I don't see any downturn in terms of activity, but maybe we will see in the next months if these first figures are confirmed. I have to say that this good orientation of activities is true for both France and Italy, countries in which we are present.
Yeah, I just want to come on to Italy in just a moment. The reason I ask about the broader kind of the broader economy is you've got this 12% return on equity target, return on tangible equity target for 2019, and I'm just wondering if there's any headroom on that, whether or not you'd like to say, actually, I think maybe we could beat that number. Could you make 15, say, on that figure? Kind of, is there upside in some of the targets? How conservative are they?
Well, we are a conservative company. We have set targets for 2020. We will not change our targets. We know that the environment is very volatile. A lot of the news you delivered this morning before I intervene are showing how volatile the economy is and also the political environment. So obviously we see that we have some margin of maneuver and we are quite comfortable for reaching these targets, but we will not raise our objectives.
What do you, as a business now with, as you say, a sizable footprint in Italy, think of the latest political developments? We have a potential scenario in which two populist parties may come together. There were plenty of bankers only a couple of months ago talking about this being the nightmare scenario for Italy. The two parties are talking about a fairly aggressive spending plan maybe being imposed in Italy. What would that mean for your business?
Well, I'm not so pessimistic. I have heard a lot of declaration coming from those two parties that they won't put into question the Maastricht Treaty objectives, notably in terms of fiscal consolidation. So I have also heard what the President of the Republic of Italy has said. He will be very much willing to maintain Italy within the Eurozone, within the European Union, and it will refuse any measure going against this participation to the Eurozone. Obviously, I'm not so much worried, nor the markets are. When you look at the spreads in the market, you see that they are not endorsing the idea that the new government, if it were to be formed, would depart from, I would say, European orthodoxy. But indeed, that puts all the economy, all the Italian economy at risk, and I hope that this message coming from the President of the Republic will be heard by the parties.
If there is stability, if we actually get some stability in Turkey, or maybe if we don't get stability, sorry, in Italy, sorry about that, can we find ourselves in a situation where you might start looking at further acquisitions? You've made acquisitions in Italy. I'd say MPS came onto the block, Monte Paschi came onto the block. Would you be interested in making further acquisitions in Italy?
Well, we are not interested in Monte Paschi, and what we said repeatedly is that we gave priority to organic growth. We are not considering any merger with any significant company in Italy for the time being. We have both Pioneer, we have both three more banks. We think that the best way to grow in a country is to make progress on the organic front, and that's what we are doing, and we have a lot of success in this regard.
Sorry, Xavier, just to kind of pick up on one final point. You said you're not interested in making any acquisitions or deals in Italy. Can I apply that elsewhere? Can I apply that across the whole of Europe? Are you looking at deals potentially in other parts of the continent?
I should be more precise. We are hearing repeated appeals coming from different parts, from governments or from central bankers, saying that time has come for European consolidation. That is not supported by what we see on the ground, and in particular all the regulation which are put in place or which have been put in place, notably by the European authorities, are in our view discouraging this sort of cross-country, cross-border mergers. So we don't think that scenario is very much realistic, and we are not there considering it as a possible opportunity for us. We think that consolidation within the country makes sense. We think that organic growth makes sense. That's the sort of things we are privileging as far as we are concerned. We are very much doubtful, again, on cross-border consolidation.